Recognize the ranking member of the Subcommittee on Capital Markets, Mr. Sherman, for a 1-minute opening statement.
Under capitalism, if by the sweat of your brow and the frugality of your spending you accumulate capital, if you have the courage to invest, you become a shareholder, and shareholders should be in control, not managers. Once again, the Democratic Party rises to the defense of capitalism against its greatest enemies, crony capitalism, and their handmaidens in Washington. The chair points out that corporate managers have said, these damn shareholders have gotten out of hand, and we've got to stop them. And that's what the bills in front of us are designed to do. This is not just theoretical. We know which side of capitalism the Chinese Communist Party is on. They are going to want to buy the technology behind artificial intelligence. They're going to want to control it. They're going to offer corporations huge amounts of money. And when those transactions close, the board gets huge bonuses. And they don't want shareholders to have a vote. And we will be told, shareholders, get out of the way. It's a big payday. That's shareholder value. No, that's selling out America to the communists. I yield back.
Mr. Sherman, who is also the ranking member of the Capital Markets Subcommittee, is now recognized.
Thank God we've had shareholder proposals. They've helped us create the norm of having independent directors, of having annual elections for directors. The average Russell 300 company gets a shareholder proposal about once every 8 years. So we're not overwhelmed by all this. Mr. Copeland and Ms. Mueller say that we should leave these issues to a matter of state corporate law. What an outrageous attack on shareholder power. Because you've got 50 states. And so if Delaware says no to a $1 trillion compensation package, you just go to Texas. But wait a minute, Texas might limit you to $1 trillion. Go to Wyoming, they'll do $2 trillion. And you know where you can go if you need $3 trillion? You just incorporate in the Cayman Islands. And look, Wyoming is desperate for money for their state operations. It's not the job of their legislators to police the national capital markets. And if they see 10 or 20 or $30 million of revenue for their state, why shouldn't they accept that in order to make sure that Elon Musk gets $2 trillion instead of the $1 trillion that cheap people in Texas might limit him to? We're told that there are only 2 firms that are providing this advice, so we should have more, and we do. Vivek Ramaswamy is creating one. Egan Jones is creating one. I like Mr. Copeland for pointing out that these are not frivolous proposals that just get voted down. The reason we're here is because these things pass, and the crony capitalists don't want to be disturbed in their power. This isn't about companies that won't publish a 93-page document that used to be a 28-page document. Ms. Mueller and others have said, well, the company shouldn't decide, or the shareholder shouldn't decide DEI policy. They shouldn't decide ESG policy. Who in the hell should decide that? The crony capitalists? Mr. Lauder, thank you for pointing out that shareholder proposals have focused on opioids. If only there had been a shareholder proposal that passed at Purdue Pharma, that would have been shareholder value and would have saved thousands, tens of thousands of lives. Under communism, the party decides who controls the means of production, and we are told now by the chair of the SEC that it is simply illegitimate for the shareholders to have a role in ESG. We're told by others that you have to be an Ebenezer Scrooge investor. You cannot be a John Denver investor. In which country are the capitalists told you have to emphasize profit over the survival of the planet? Shouldn't the shareholders decide that? Materiality is what the shareholders want, not just what's earnings per share. But Mr. Lauder, if there was a proposal at a company considering selling the most valuable AI technology, the keys to the 22nd century, the keys to dominance in the world, and the company was going to make a lot of money and big bonuses for management, do you think that would be good shareholder value that you would vote for?
This is such a good example. We are going to need good AI policy in the coming years. And of course, Congress will have a role in developing and setting it, but the corporations that are operating that technology are clearly going to have a role as well. And of course, shareholders need an ability to weigh in on those issues and not just leave it to managers who indeed have much more short-term and personal interests. So that is a great example of something that needs to be figured out in this way.
When the corporation can hire whatever law firm it wants without criticism, they can devise policy without sharing it in advance with the other side. Should shareholders be subject, if there's a battle between management and shareholders, should it be a fair fight, or should we have rules as to who you can hire if you're a shareholder, but no rules for who you can hire as a consultant if you're the
One thing I think that's important to point out here is the SEC already rules for management 68% of the time when shareholders bring proposals and managers object to them. So it is
And we
not a
should be
willy-nilly-
changing the rules to allow more shareholder democracy. I think Ms. Mueller pointed out how complicated these rules are. We should make them simple and allow shareholder power. I yield back.